evening, all. Ira Epstein, and here I am with the financial market wrap-up. And this financial market wrap-up is for the evening, as we're now here on Thursday, the 22nd of January, 2026. We're at 5:55 p.m. Central Time. So in looking at these markets, my friends, what's going on? Well, you had a big up day in the stocks today. You're giving back a little bit on early profit taking. A disappointment in Intel. While it beat on the earnings and it beat on the revenue overall, they're having trouble with suppliers. And you're hearing that in a lot of different places, and that's become a problem. And as this market can't get enough of the goods that they want, that's it. Elon Musk was talking today about his Optimus robot. I love the name. You know, we all know what that's from. And on the Optimus that he thinks will be ready in 2027 for deployment finally into households and that. We'll see if he makes those dates. The interesting thing is he said there's no supply chain because everything they're doing is brand new. And there's so much truth to all that as to what's going on. But isn't that what AI is about? AI has carried these markets because we're into something brand new. I'm going to repeat. It's like getting the mobile phones when we first got those. You remember the lines with the first Apple phones. We all had the Motorola Flip Razr phone, but then that other product came out from Apple, and boy, that changed the world. Well, AI is a world changer any way you want to go about it. People that don't believe that, they just don't understand change. I remember when that thing called the internet came. I remember hiring people from an IT college. They worked in our office building computers, physically building them so we could do simple moving averages. So you learn to recognize when these events are there. The energies got hit today, but we've got this cold weather, and we still don't see a market that, in the energies at least, is throwing out any big bear signals. You had a monster rally in the natural gas off the cold vortex that has hit the Midwest, New Mexico, Texas. Then it's going to swing south and northeast. So this is going to hit hundreds of millions of people. I know in Chicago they're talking that, and I'm now outside of Chicago, where I'm at, they're saying Saturday the high without wind chill will be a -1. So that gives you an idea how cold this is going to be. And next week, we're not supposed to get over freezing in many parts of the country. So we'll see what that all does. I'm bearish on the dollar again. You had a big outside day down today. Been looking for a signal that says the end to the rally. That just may be it. So we'll talk about that all in a minute. We have a couple of reports tomorrow. We get the S&P Global Group. They're going to come out with their manufacturing and service sector PMIs at 8:45. And then we'll get the University of Michigan, their final consumer sentiment indices at 9 o'clock in the morning. All right? So why don't we take a look right now, come back to the charts and see what we've got. When you look at the S&P, you're down 0.5% for the week. Now, the market's made back a lot of ground. It can lose more of that. It's still staying above the 18-day average. I'm going to repeat. The seasonals are strong normally through mid-February. And a lot of the new buy signals kicked in again yesterday. So we'll see if that works. Do you remember I said that we had a gap in the chart here and markets like to fill gaps? Tell me what today did as you filled that gap. You don't believe me? Go to the video from yesterday. It's right there. It's still up. You still have a pattern of lower highs, lower lows, which means the momentum is to the downside. Well, I shouldn't say that. The swing line is to the downside. Momentum is decided by where you are in the relationship of price to the 18-day average. It's under it. So the momentum for the moment is down. What about, and actually, that's even the wrong word. The bias is down. Momentum is determined by this right here, the slow stochastics. I got it out of whack. I do that occasionally. Age, gray hair. Lower highs, lower lows, momentum, bias down. Not the place to be just yet. When I look at the NASDAQ, it's pretty simple. Lower highs, lower lows. You fill the gap in the chart past 2 days, and you're stuck at the 18-day average. Okay, you got to change this pattern to get bullish. You haven't done it yet. The Dow made a run for the past high, but it's still lower highs, lower lows. The difference here, momentum pointing up a little bit, And bias is certainly up as the market for now, the 2 days, including tonight would be the third, is over the 18-day average of closes. But the strength of the market is right here. It is all in the Russell, and that market's the one that has taken off, and that's where the strength is. It's called rotation, rotation, rotation. Then we get to the DAX, which saw that correction, and it has come back to the 18-day average, void of a trend. You have a higher high and low and sort of stuck here. Momentum, which had been turning down, is now flattening out again. In the 10-year notes, it still looks bearish to me. Lower highs, lower lows, under the 18-day average. It got under the Bollinger Band for 2 days, and I told you it rarely stays under it very long, 5% of the time, and it's moved to the right-hand side. It's still an oversold market and a downtrend. 2-year notes is got an embedded reading. This is even more bearish, lower highs, lower lows. Then we step over to the dollar index. So now I think the bears have something to hold on to. If you take out the highs of today, Thursday, that negates the bearishness that I see on the chart for the moment. But barring that, I think the pros are going to sell into this area between the 100-day and the 18. The first stopping zone might be 97, 96. And if that lets go, you've opened the door up for wherever that Bollinger Band comes in. It'll probably be in 97, 80 area or something. So I can see more of a downside. The Euro flip-flop doesn't have resistance above it. So on the breaks, I think it'll get bought, but it's too overbought. So my filter would keep me away from that. It would put me into the dollar index, but not the euro because of the overbought condition. When we look at the yen, it's still lower highs, lower lows, an oversold market, no question. Nobody's intervening that I can see right here. You're not moving in price very much, that's why. As we take a look at Bitcoin, we have a pattern of a lower low, a higher high. I don't see anything in that at all. I see an oversold market with downside bias. Not certain that there's any trade signals there. You got up and over the 18, the 100, and the 200-day average. So you worked on that from right here. As you pulled back, that became the support. To get really aggressive on the bear side, you've got to get back under 63.02, the 18-day average. Otherwise, I don't see a darn thing there. And that equates to 58.77, same type of pattern in the WTI. When we come to the heating oil, we'll just go outside and you understand there's going to be demand for it. So you're not trying to pick a top, and people often do. You know something? You don't need to be the first guy in the neighborhood at the top. Sometimes if you're wrong, you can't get out of your problem. Nat gas, same thing. I told you that I thought there'd be big resistance, and I used the word big right here, the Bollinger Band and the 100-day average in an overbought market. I'm not changing it. What are they going to do? Tell me it's going to go 10 below? Okay. They're already telling me that by the Weather Service that parts of the Midwest, all of next week is going to stay cold. You don't think that's built into the market? And we will get another report next week that'll show another draw. There's no way you can't get it with this type of cold weather. So those things are known in the market, and don't think you're going to beat Uncle Sam's weather people. All right. They're just telling you what's there and where you go with it. Now, as you heard me talk to you just now, I said that one of the things I watch, and it's a big tool that I use, is this, the Outside Day course. I created 9 video chapters where I walk you through different examples as to how it sets up, what it does, and how I interpret the use of it. I do it in spiders, ETFs, and the futures market. So I'm covering it all the way through for what you do. In a nutshell, when you get a market move and you get an outside day, it's one of two things, a continuation pattern or a stall pattern. Could it be the beginning of a new trend, like I just showed you in the dollar? Absolutely. So there's 3 things that it can become. The most common is continuation or a new pattern coming at you. That's very, very common in it, and that's how I interpret it. So if you go to our website, You go to the courses, you'll see the outside day course. You go to iraepstein.com. It's all waiting for you there. I'm waiting for you in the other videos tonight. And of course, I'll see you in those and first thing in the morning flash video. Got our new studio all done. I think the coloring looks pretty good. We got the new lights up yesterday. The only thing I haven't gotten is the drapes in here that we need to keep out the morning light, but this is the evening, so it works pretty good. I'm Ira. You have a good day.